Okay, hi everyone. Welcome to today's webinar. So apologies for the late start. I had some difficulties, some technical difficulties with starting the webinar. But we're here now, and today's webinar will be on advanced Ichimoku strategies. So, as per usual, a risk warning and disclaimer as follows. Let's dive right into it. I'm Melanie, and I'll be your speaker for today. So here's today's agenda. We're going to start off by talking a bit about what exactly is Ichimoku Kinko Hyo. And then we're going to look at dissecting the different lines and how to use the indicator effectively. Okay, so let's take a look at what exactly is Kinko Hyo. Ichimoku Kinko Hyo. So Ichimoku translates to at a glance or one look, and Kinko Hyo translates to the table of equilibrium or balance table. So it basically helps us to define support and resistances, identifies trend direction, and also reflects momentum. So now breaking down the different lines, the Ichimoku cloud is composed of 5 lines of calculations, 2 of which comprise a cloud where the difference between the 2 lines is shaded in, and the lines include a 9-period average, a 26-period average, an average of those 2 averages, and a 52-period average, and a lagging closing price line. So how exactly you can use Ichimoku for trading? As we mentioned earlier, it helps us to identify trends, identify support and resistance levels. You can also use it as confirmation, which is typically how we like to use it, and also for the buy and sell signals. And the cloud is a key part of the indicator. Okay, so let's break down the different lines. So we mainly like to look at the cloud. So the trend is considered to be downwards if price is moving below the cloud, and the trend is up when the price is above the cloud. Next, trend signals are strengthened if the cloud is moving in the same direction as the price. So for example, during an uptrend, the top of the cloud is moving up, or during a downtrend, the bottom of the cloud is moving down. So just some calculations if you're curious. How the Tenkan or the conversion line is calculated is basically the 9-day high plus the 9-day low divided by 2, which gives us the midpoint. The Kijun Sen or your reference line is the highest line for the past 26 days plus the lowest low for the past 26 days divided by 2. So it gives you the midpoint as well. Chico span or your lagging span is the closing price for the current day, moved back by 26 days. And the Senko span A or leading span A is the conversion line plus the reference line divided by 2, advanced 26 days in the future. Senko span B or leading span B is the 52-day high plus 52-day low divided by 2, advanced 26 days into the future. But most of the trading platforms already have this calculated for you. So this is just additional information if you're curious. Okay, so now let's look at breaking down some of the different lines. We briefly mentioned the cloud, the Chikou span, Tenkan Sen, and the Kijun Sen. So now let's talk a bit about the different lines that we mentioned earlier. So firstly, we're looking at identifying trends. The Tenkan Sen, and the Kijun Sen, the blue and red lines, are used to identify the trend of the market. So a bullish trend occurs when the Tenkan Sen is above the Kijun Sen, and a bearish trend occurs when the Tenkan Sen is below the Kijun Sen. So a bearish trend is when the blue line that we see here, the conversion line, is below the red line, the baseline. So over here, we can see very clearly with prices moving upwards, the blue line is above the red line. Once there is that kind of switch, and the blue line crosses below the red line, then that is a kind of the start of a bearish trend. Okay, next, identifying support and resistance levels. So one way that the Ichimoku indicator helps us to find support and resistance levels is basically using the Senko span A and B levels, or the leading span A and B. So if price is above the Senko span A and B, it's considered a bullish market, and the Senko span A and B can act as support levels. If the price is below the Senko span A and B, it's considered a bearish market, and the Senko span A and B can act as resistance levels. I think this is pretty straightforward, so I won't dwell too on this, so that we have more time to look at our charts at the end of our presentation. Okay, so here you can see the leading span A on its own and the leading span B. I think you can kind of already see where you would place your resistance and support levels over here. Yeah, so I won't dwell too long on that. Okay, now we're talking a bit about the clouds. So the clouds are basically the plots. You can see over here, this is from TradingView, the plots in between the leading span A and B. Okay, and here are our inputs if you want to take a screenshot. Our conversion line is 9, baseline length 26, leading span B length 52, and our displacement 26. Okay. Yeah, so this is what it looks like if it's 26 and 36. Obviously, this is also kind of dependent on um your time frame that you're using as well. So here we are using the 1 day time frame and we changed the displacement to 36. Okay, so Ichimoku generates buy and sell signals based on the positions of the various components. For example, a buy signal is generated when our Tenkan Sen crosses above the Kijun Sen, and a sell signal is generated when the Tenkan Sen crosses below the Kijun Sen. We already talked about this previously, the red and the blue lines, for simplicity's sake. So if we talk a bit about the Chico span now, so it's said to be one of the most important out of the 5 lines. So when the lagging span is above the price candles, it is dominant buying. And when the lagging span is below the price candles, it is dominant selling. So buy and sell signals in the Ichimoku equilibrium table represents the upturn or reversal of the lagging span. And when the lagging span exceeds the price line, it's called the improvement of the lagging span and a buy signal. When the lagging span falls below the price line, it's called the reversal of the lagging span and a sell signal. Okay, so here is what we were trying to explain earlier. Your dark blue line is the lagging span or the Chico span, and it's used to confirm the signals that's generated by the Tenkan Sen, which is your conversion line, the Kijun Sen, the baseline, and the Senko span. So both of the leading spans. So if the Chico span is above the current price, like we see around here, this area here, it confirms a bullish trend. And if the Chico span is below the current price, then it confirms a bearish trend. Any questions so far? I think it's pretty straightforward so far. So let's just continue. Oops. So the most effective way to use the Ichimoku indicator is to check the overall trend of price. So the overall trend is up when price is above the cloud, and it's down when the price is below the cloud. Trendless or transitioning when the price is within the cloud. So traders will often use Ichimoku Cloud as an area of support and resistance, depending on the relative location of the price. The cloud provides support and resistance levels that can be projected into the future. This sets the Ichimoku cloud apart from many other technical indicators that only provide support and resistance levels for the current date and time. Okay, so here's how we can use it effectively. We briefly mentioned it already with prices moving below the cloud. That's considered a bearish signal. You can see the transition phase occurring when price is moving within the cloud. And once price starts bouncing off of it and moving upwards above the cloud, then that is a bullish signal. Yeah. Okay, so that's all for my slides. Now let me just pull out our charts and then we can take a look at a couple of charts by using Ichimoku as well. Okay. Okay, let's go ahead and take a look at a couple of charts. Oh wait, let me share my screen. Okay, can you guys see my charts now? Okay, wait, just give me a second. I don't think. Uh, okay, it says I'm sharing on my screen. Hmm. Okay, let me try one more time. Yeah, I'm not sure why my computer is acting up today. I'm so sorry about this. Okay, should be able to see now, hopefully. Okay, great. Thanks, guys. Okay, so let me know in the chat if you guys have any specific charts that you'd like me to go through. As you can see from both of my analysis so far, I'll run through both of them as well. But Ichimoku is an indicator that I personally use pretty often as well. So we can go ahead and take a look at some of the techniques that we mentioned in today's webinar. I think to start off, we normally go through DXY since that will affect most of our charts. So, while you guys are letting me know in the chat if you guys have any requests, I'm gonna go ahead and pull out our DXY chart just to get the ball rolling. Okay, just give me 1 second. I'm gonna connect. Okay, let's go ahead and analyze our DXY. So let's start off by looking at our weekly time frame. So on our weekly time frame, you guys can see prices recently reversing off this um this swing high here. Now, if we look at our daily time frame, yep, we can kind of see that happening again as well. And I also have this ascending trend line here. Mm. Okay, so this is where I'm going to place my first resistance since it's in line with two swing highs. Yeah, so you can see the swing low here and one swing high here and one swing high here. Okay, so that's going to be my first resistance. For my first support, or let's see, probably place it. Mm, okay, yeah, maybe just down here. Yeah, just down here because prices recently rebounded off that level. Okay, so that would kind of be my entry. And then for my second support, maybe just over here. Okay. Yeah, so now I want to zoom into the shorter time frames and take a look at our 4-hour time frame instead. So earlier we saw this ascending trend line, okay, and that's still applicable on our shorter time frame. So my first support maybe here, and my first resistance up here at this swing high. Mm, okay, and for my second support, just over here. Okay. So obviously over here we are expecting prices to continue within this ascending trend line. But let's see if our Fibonacci levels and our indicators support that analysis. So here I'm using a Fibonacci extension technique, which basically looks at this Nike tick kind of shape. And I can see my 127 lines up nicely with my first resistance. So I'm going to keep that. Okay, and for my first resistance, let's see. Okay, I have a couple of retracements. Uh, okay, so my 23.6, you can see it lines up nicely with my first support, but it's no longer valid because prices have already broken out of that level. Okay, so I'm just gonna keep that 38.2 in line with our second support. Next, going in with a projection. Okay, price has already broken out of this 100%, so I can't use that anymore. Mm, yeah, I think that's all the levels that we have. So now let's take a look at some indicators. So like I mentioned earlier, I like to use Ichimoku and I use Ichimoku pretty regularly. So let's look at Ichimoku and MACD. So I like to use these two because at one glance you can see exactly what the signals are. So for example, um, with MACD, you can see prices are giving us a bit of a bullish momentum, whereas on our Ichimoku, as we mentioned earlier, prices moving below the cloud give us a bearish signal. So it's currently giving us a bearish signal, so that doesn't support our analysis. So I'm going to remove that. Now, if we look at other indicators, let's look at Bollinger Bands, maybe our moving averages. I like to use our EMA and SMA, as well as the parabolic saw. Um, okay, you can see okay, prices aren't really telling us much on our Bollinger Band, so I'm going to remove that. But with regard to our parabolic saw and moving averages, you can see prices moving upwards above both of our indicators, so that supports our analysis. Except parabolic saw, that doesn't support analysis. Okay, you can kind of see prices recently crossing over. Let's maybe look at our RSI and stochastic as well. They're not really telling us much, but we can see prices moving in and or rather our indicators giving us a bullish signal with as they're moving upwards, kind of into that oversold region. Okay, so we can keep these as well because they do support our analysis. Yeah, okay, that's all for DXY. Do you guys have any questions or any other requests? Okay, if there are no other requests, yeah, let's look at gold. Okay, so on a weekly time frame, you can see prices generally moving in an uptrend, although there is a recent reversal once again. Yeah, let's go ahead and add some support and resistance levels on our daily time frame, and then we'll zoom in onto our shorter time frames and look at maybe our 1 hour or 4 hour time frames. So for my first support, I'll place it at this overlap swing low. For my first resistance, I'll place it at this swing high. Or actually, maybe even here. And then for my second support, just over here. Okay, this is my second support. Okay, now looking or zooming into our lower time frames. Uh, let's do the same thing here. Okay, on our daily time frame, we kind of saw a bit of a bullish momentum, and I think on our 4 hours as well. Let's see if we have any trend lines or trend channels. Okay, we do have prices moving in this trend line, so that is giving us a bit of a bullish momentum. Um, um, Okay, this is going to be my, oops, should be my first, support. And my second support, maybe just here. First resistance here. Okay, now going in with our Fibonacci levels once again. Um, okay, I guess our 61.8 is quite close to the first resistance. So when it comes to Fibonacci levels, it doesn't really have to line up exactly in line, just as long as it's kind of close to your levels, that's good enough. Because we're looking for confluence areas more so than specific levels. So this is, I think, pretty close enough. So 61 lines up with our first resistance. Um, okay, I think that might be all the levels that we have for now. No, I think we might have another retracement here. Yep, my 61 lines up with my second support. Okay. Now looking at our indicators, Ichimoku again and MACD. So prices are moving within the cloud. So as we mentioned earlier in our slides, when the price is moving within the cloud, that is a transition, kind of a transition phase. So that doesn't really tell us much about the overall trend. MACD, you can see is, that's expanded. You can see it's giving us a bit of a bullish signal, so that does support our analysis. Let's actually maybe look a little bit more in depth into our indicators. So normally, what I like to do with Ichimoku is like what I've been doing, basically just take a look at the cloud. But since we just went through some other techniques that you can use with Ichimoku, let's try and see if we can use that as well. Okay, so yep, so our inputs is what was in our slides earlier. Let's try 36. Yeah. Um, so if we go back to our slides, let's start off by looking at the very first line that we talked about, which was the blue and the red conversion and base. So looking at Ichimoku. Okay, let's look at the conversion and the baseline first. So when our blue line crosses over the red line, that is a bullish signal. When it crosses below, that's a bearish signal. Here you can see there isn't really much signal over here, so I'm not gonna go through that. So we've done the first technique. We also looked at our plots, which didn't really tell us much. So next, let's look at this is support and resistance, which I am not going to use. Okay, reason why I'm not going to use the support and resistance levels is because we already have it mapped out. And also we've already looked at the cloud, which is basically what this is doing. It's basically lining out where are the shape of your clouds. Okay, so I'm not going to do that. Next, we talked about the Chico span. Okay, let's take a look at Chico span, which is the lagging span. Right. So here, as we mentioned in our slides, if the Chico span is above the current price, it's a bullish trend. Okay, I'm gonna just get rid of the cloud since it's not telling us much. Okay, so here you can also kind of see it's not really telling us much. Um, okay, so once again, I'm gonna remove this method, this technique. Yeah, so clearly we can't use our Ichimoku here. Okay, this is kind of a bad example to use the other techniques on, but I just wanted to show you guys what exactly it will look like on the chart. Okay, let's continue. So I have MACD. I want to use RSI stochastic, maybe our moving averages and parabolic saw. Okay, so for parabolic saw, prices are moving above the indicator, so it is giving us a bullish signal. Moving average, I don't think it's really telling us much right now, so I'm gonna remove those two. Um, RSI and stochastic. Okay, I think stochastic is giving us a bit of a bullish signal with prices moving in this ascending trend line. Okay, so that does support our analysis. Um, as for RSI, okay, RSI, this is not a valid trend line, so I'm gonna remove RSI. Okay, so that's for gold. I am expecting it to continue moving upwards. But we just have to see because it is in a transition phase right now. You can see prices kind of just moving sideways. One way of looking at it is comparing our gold to DXY. Since DXY we saw earlier was moving in an uptrend, we can expect gold to move in the opposite direction since they are typically inversely related. So here we might see prices continue to drop out of below this first support. But like I said, we just I think we'll wait for price to either bounce off the first support or break out of it since it's currently testing that level. And since as we saw from our Ichimoku as well as our moving averages, um price is kind of in a transition phase. So it's not really telling us a clear trend at the moment. Okay, any questions? Okay, if there are no questions, we still have some time. So I'm gonna go through a couple more charts. Let's see if we have any requests. Okay, no. So let's go ahead and maybe look at our euro dollar as well. Okay. Um, so starting with our weekly time frame again. So I like to start off from a higher time frame and then work our way downwards, just so we can kind of get an idea of the general trend. And that way we can also analyze the chart on multiple time frames. So on a weekly time frame, you can see prices generally moving downwards. There has been a slight reversal with that's in line with this support level. Okay, now on our daily time frame, okay, this is my first support. And my first resistance, I think I'll place it maybe here, since it's in line with mini swing lows and swing highs as well. Mm, and then for my first or my second support, maybe this swing low here. Okay, since it's in line with a swing high as well. This will be my second support. Okay, this is just a brief analysis on our daily time frame since some of you guys have given feedback that you prefer for us to analyze on the 4 hour time frame instead, or on a shorter time frame. But yeah, I know everybody has different preferences, so I do want to go through daily as well, in case that's what you're looking at. Okay, now on our 4 hour time frame, mm, yeah, I just really wanted to quickly look at any retracement levels that might line up with any swing lows or swing highs. Okay, yeah, 38.2 lines up nicely. Okay, and it lines up with a bunch of swing lows and swing highs as well. So this is, oops. And then for my first resistance, or rather first support, that's just going to be at this level here. Is my first support, and up here is my first resistance. Okay, I'm just gonna keep the 38.2 since that lines up with our first resistance. And okay, I think we have a Nike tick shape here as well. So I'm gonna go in with our extension. Okay, and our 161.8, you can see it lines up. Let's see if we have any levels here. Okay, this will be my second support. And this is in line with our 161. So I'll just keep that. Next, I'm going in with a projection. Okay, 100%. Can see price has already broken out of it, even though it does line up with our first resistance. So I'm going to move that again. Okay, I might go in with a retracement here. Okay, and my 50% lines up nicely. Okay, I think that's all the levels. Okay, I'm just thinking because second support and our first support is kind of close together. So I think I might make our second support a intermediate level instead, and then place another level there. Okay, because overall it is a downtrend, so that is the position that we are going to take. This is our kind of a intermediate level. Okay, and then for my second support, I'll just place it further down here. Okay, in line with this pullback support level. Okay, now I'm gonna check to see if we have any other levels that line up. Yep, our 61 also lines up. Oh, thank you. I am Singaporean. Yeah, but thank you. Okay, getting back to this. I think that's all the Fibonacci levels we have. Now let's take a look at some indicators. Again, starting off with Ichimoku and MACD. So price is moving above our Ichimoku cloud. You can see it kind of bouncing off. So that is giving us a bullish signal. Um, but our MACD is giving us a bearish signal. Okay, and overall, I think we would be taking a bearish stance as well. Because once again, euro dollar tends to be inversely correlated to our DXY. So you can think of it that way if it helps as well, since prices are moving sideways right now. Yeah, so we are expecting it to continue in a bearish trend, but yeah, like I said earlier for gold, we'll keep this kind of we just have to keep an eye on this for now. But we can also look at other indicators. Let's look at Bollinger Bands, moving averages, parabolic saw, stochastic, and RSI. These are the indicators that I normally like to use. But yeah, if you guys want me to use any other indicators that you normally use, feel free to let me know in the chat as well. So for stochastic, on stochastic, we kind of have this hidden resistance level, okay, which basically tells us that previously whenever price sorry whenever stochastics bounces or reverses off of this level here, price tends to drop, which is what we see here, right? We saw prices dropping after it hit this peak. After it hit this peak as well, we saw price over here. We saw price drop. Similarly, right now we're seeing price hitting that peak again. So we're seeing we should expect price to continue dropping as well. RSI isn't telling us much, so I'm going to remove that, even though it was giving us a bit of a bearish signal since prices were moving into the oversold regions. As for our Bollinger Bands, it's not telling us much. Oops. What did I do? Okay, Bollinger Bands aren't really telling us much, so I'm going to remove that. Parabolic saw, we recently saw prices cross over that. So that is a bullish signal, which is not really what we're looking for. With prices moving below our moving averages, that still supports our analysis. Okay, so again, just keep an eye out for this area in line with our first support. Okay, any other requests? Okay, we still have a little bit of time, so maybe we'll take a look at um let's look at oil. Mm, Okay, so on our weekly time frame, we can see prices generally moving downwards. Um, do I use zigzag? Is that an indicator? Um, or is it a Fibonacci technique? Oh, if it's an indicator, then no, I don't use that. So these start indicators are normally the one that we like to use. Okay, I see it here, but I don't normally use this. Let's take a look. Okay, I'm not too sure how to use this. Um, but I can find out if you guys are interested and I can start kind of implementing it in our future webinars if you like. Do any of you does anyone else use that indicator? Yeah, just let me know. Okay, so on our weekly time frame, we have prices generally moving downwards, daily time frame as well. Um, okay, we don't have a descending trend line because price broke out of that trend line over there. Um, wait, let's see. Yeah, no, so that's not a trend line. If we just really quickly, because I am running out of time, but really quickly, let's just put our support and resistance levels on our daily time frame. Okay, this is my first resistance. Mm, and for my second support, maybe just down here. Okay, my 50% lines up. Mm, 61 lines up with our second support. Let's see. I think we have an intermediate, a Fibonacci extension here as well. Yeah, my 161 lines up with my second support. So again, if you guys can't really see where the shape is, it's just this Nike tick shape. In this case, it is inverted. So if it's upright, it will look like what we did earlier. If it's inverted, it will just look like that. Okay. Um, yeah, let's look at some indicators. We have prices moving below the cloud, which is giving us a bearish signal. MACD, I'm not really going to use because it's not really giving us a clear signal right now. Um, Let's maybe look at Bollinger Bands, moving averages, parabolic saw, RSI, stochastic. Okay, so stochastic, we have this ascending trend line, which is giving us a bullish signal. RSI, okay, I don't think RSI is telling us much as well. Um, okay, prices recently crossed over our moving averages, so that is giving us a bullish signal. Parabolic saw is giving us a bearish signal. Okay, I am expecting prices to continue moving upward towards our first resistance. Okay, Bollinger Bands isn't telling us much, so I remove that. Ichimoku I won't use as well since it doesn't support my analysis. SA as well. Let's look at MACD again. Okay, I guess it is giving us a bit of a bullish signal, so I'll keep that for now. And stochastic, you can see, is also giving us a bullish signal. Okay, so the reason why I think it's going upwards is because prices, you can see, are bouncing off our first support. Yeah. So I am expecting it to have enough momentum to at least reach our first resistance, especially since our first resistance is in line with so many swing lows and also two confluence levels. Okay, so this is, I think, a pretty significant level, and I think prices will. This is resistance. Yeah, I think prices will continue moving upwards, at least towards our first resistance. Okay, that's all the time we have for today. Thank you guys so much for joining me. I hope you guys found this session helpful. Um, yeah, have a great rest of your week. If you guys like me, feel free to connect with me on LinkedIn. It's just my name, Melanie Chong, and I will see you guys again next week. Thanks you everyone. Bye. Thanks, guys.